Hi traders, this is an example of a 15-minute live trade that I've just completed, and I scrapped that video because I realized that there was a lot more information that I'd like to give you guys, and I didn't put that into it, so I'm just redoing the video. Now this is going to be after the fact. I just took a 15-minute trade both on the AUD JPY and the AUD USD. In actual fact, it was on the 15-minute candle, but I believe my trades were about, both one was about 9 minutes long, and the other one, which was this one here, I took this trade on the pullback. So this went in at about 6.5 minutes or so. Okay, so here's basically what it was. Now I've got all my currency pairs open. Just to draw your attention to some of the stuff that I've added on there. Now, in the interest of wanting to make price action easier for you guys, I've started adding some things back onto it. So these are the Bollinger Bands. There's a strategy that you can trade in regards to candlestick positions on Bollinger Bands. And these yellow lines here that I've drawn in, okay, these ones go in on the 4-hour chart. So what I do on AUD JPY, I've jumped onto my 4-hour chart and then looked for an area where I'm seeing a lot of resistance. Okay, chances are if I've got this on the 4-hour chart, then that's going to happen on the lower chart as well, or it's a stronger point of reversal for me to look into. So I've scanned through all of my currency pairs, and then I've drawn in some of these lines. So you'll see this on these three currency pairs more clearly. Okay, so what was going on here was, this is effectively when I took notice of the market and the possible setup that's going to happen. Now these on the AUD JPY, which is a complete Asian currency pair, and AUD USD, which is partial Asian currency pair. Now here I took note of this massive long wick and this one here. Notice how this one on the AUD JPY went and hit my 4-hour line. This was a news release. This is a classic example of where the market maker would possibly use news to complete whatever it is doing. So this was actually good news for the Aussie dollar, and so markets spiked up and then pushed back down and finished off in the red. Notice in the red here as well with the AUD USD currency pair. Now, once that did that and the market pushed down, here's what I was taking note of. One, the fact that there was a lot of wicks down the bottom here, and this continually pushed down. I waited for this to complete before I realized that this is a potential trade that's coming into play. Now, this is where patience and discipline is essential. When I saw this, this was a good 45 minutes before I actually considered taking my trade, which was here on these candles. This one here and on this one here. Now here's the mindset. This is what happened in my head. Okay, so I first of all looked at this pullback, closed off in the red. I looked at this bit here and I thought, okay, this all of these three candles here, 4 candles, are showing me that the market was pulling up his handbrakes. It took a little while to push back down, trapped a lot of traders down here as well, and then pushed back up again before it decided to come back down. Although this was good news for the Aussie dollar, notice how it completed in the red, and then this whole candle here pushed all the way down here. This one is the one that I started really paying attention to. Okay, this green one here and this one here. On the fourth wave of the W or the M, so this is the fourth wave. The first wave, second wave, third wave, fourth wave of the W. And here's the first wave, second wave, third wave, and here's the fourth wave. So on the fourth wave, what we're looking for, and here's a sign that the market makers will give you that they've done their thing and they're heading off, is when they now do issue with you with a big, long, nice candle going in the direction where you think the market's going to head to, okay? When it does that, now in this case, this was still smaller than this big red candle, I paid more attention to this one here. The reason why I took a trade on both of these two is because of the correlation between these two currency pairs, okay? So whatever this does, there's a high chance that this one's going to follow suit and do exactly the same thing. Similar, possibly a smaller or larger movement, but the setup would be similar, okay? So in this case, what I was looking for was this green candle to be much bigger than all of these combined. And so this is what the market maker is saying to me. Okay, I've done my stop hunts. I've trapped enough traders as I wanted to. Now I'm going to push this market away from where I want it to go. Okay, so it pushed away, and then it did slow down for a bit here. So on this one here, I waited for the pullback to happen, and then take this trade. I believe, again, I think it was about 6.5 minutes left on the clock, and that's when I realized, because this pushback down wasn't significant either. The EMA 6 at that point in time was somewhere down here. Now I had to make a judgment call on where exactly the EMA 6 would be in relation to this trend moving up. So having said that, I knew to some degree that this fourth wave movement is going to ensure, especially after this big green candle, that this is still also going to be a green candle. So that strategy where I say that trade the fourth wave and trade the candle after these moves. So this could have been a green doji as well with a nice long wick. This to me is still the first candle. Okay, the one that's signifying that they've moved the hell away from this whole entire zone, and then I can take the trade on this one. Another reason that I looked for to ensure that this is going to be an in the money trade is I looked to see where this whole thing was happening in relation to a session. So because this is an Asian currency pair, I looked to see time-wise as well. Now, this was just past midday. I normally look at lunch being at about 1, so 1 to 2 or so. So this was prior to lunch in my opinion. The other thing that I looked at was the fact that this was smack bang almost in the middle of the Asian session. So I knew that the market maker probably won't just enter into consolidation for a brief while. Here, this is possibly going to consolidate now for a little while. Might go up, might go down. Chances are that you're probably going to see a false move go down here before the market does push back up a little bit as well. Okay, and that's going to go into the London session. These are the predictions that we're starting to make. Okay, the other thing that really convinced me to jump into these trades is this one here and this one here, was the fact that I paid attention to the top of this candle, this green one. There isn't a significant pullback. Notice how here there's a lot of wicks developing here. So what that's showing me is that the market is slowing down. Okay, so I won't be able to confidently jump into these trades and say, okay, the market's going to go up here somewhere. Okay, two more things that you can certainly do in being able to make sure that you are positioned properly. So I'm going to jump onto AUD/JPY. I'm going to use the Fibonacci tool. Now, I'm going to hold it here. This was the news release. You could use it on this one, but I'm going to choose to do this one and push down to this point here. See this candle here? What I'm paying attention to is one, the chance that in order for me to be safe, I'm going to take trades all the way up to either the 50% mark or the 61.8 line. Okay, that's one. Two is when I'm looking to trade this second candle here, and I want to make sure that I get a good entry, I can do two things. One is I pay attention to where the EMA 6 line is. So if that's pushing down and the EMA 6 line is somewhere here, if it comes reasonably to a point where I say, okay, it's hit my EMA 6 line, and if this is going to be a green candle, chances are this place here, this point here is going to be below it, then I can consider taking a call trade for the remaining duration of that 15 minutes. Or if I've got my fibs on there as well, what I can do is have price come down to a point to one of my lines or somewhere close to it. If it's coming somewhere close to it, then I can then hit it again at that point in time to climb back up, to go back up to wherever I'm predicting the market's going to go. So that's a couple of ways of looking at it. In this case here, see, I've got a couple of more lines on my screen. I've got the Bollinger Bands on there as well. Again, I'm trying to figure out better, simpler ways for you guys to be able to trade this without having to be too intuitive with your trades. So I've got the EMA 200, which I tend to use more for forex trading, but this certainly can help you. This one here and this 50 EMA, that can help you with dynamic trend lines, or use them as dynamic trend lines when it comes to binary. That plus also I've got the middle Bollinger Band here. So here's the thing that I'm paying attention to, that this candle is a fair distance away from this, and this. So I decided to take the trade of the pullback here. Okay. Yes, for a large duration of my trade, this was still like a little red doji. That was another significant giveaway for me that this is still going to push all the way up, because if the price fails to push down, chances are this is still going to go up. So all of these, the thoughts that are going through my head is part and parcel of the analysis in whether or not I take this trade. Okay, so um, I took both of these trades, and I was actually in the wick space when I did them. They went up, they won. Now, when this one's producing a larger wick on the top, although these three candles here in the last 30 minutes or so have been green, I would probably consider stopping taking the trade, because again, chances of me losing a trade increase. That's the only way that I can to me myself justify that I'm going to be 90%, 95%, 100% in the money. Okay. Now here, let's use fibs again to justify how far we would have gone. Now, for argument's sake, I'm going to use this line here to put in my Fibonacci points. Now, here's what I could do as well. Now, this trade here, I'd say, okay, this is pushed up high enough towards my 61.8 line, so I would consider not taking any more trades here. Okay, even though, again, these are three green candles, this is the only trade I would consider taking. So this one, and I'm done for the day. Because this has already pushed past what my standard rules would be to not go above the 50 or the 61.8 line. Okay, this is the present high that I've used. This is the present low that I've used. And same case here. This is the present high. This is the present low. And this, again, would push maximum to either my 50% or 61.8%. Notice how as soon as you get to the 50 and the 61.8 line, what happens? The candles start issuing you with large wicks, and although this is still a green one, this could also have been equally a red one coming back south down here. So this is how we avoid taking those trades. If you use all of this information in conjunction with your dynamic EMAs, even possibly your Bollinger Bands, and also drawing in your support and resistance lines like I have here on the 4-hour chart, chances are you could so comfortably add a few more strategies in being able to take very comfortable, very nice trades. Right now I am experimenting quite a bit with some of my 10 European brokerage accounts, so I do very cocky things on that. And yesterday I was testing a pullback where I put the whole entire account onto the trade itself. I'm not recommending you guys do that. I certainly just do that on my live demo accounts, as I call them. So they actually are live accounts with live money in it. It's just I'm not concerned about wiping out those accounts. So keep testing these methods. Certainly experiment with your Fibonacci lines as well, because that's going to give you an idea of when to take the trade. I just want to also stress the point that for me to take this single trade here for 6.5 minutes, and this is I think 7 or 9 minutes or so, the analysis that potentially went into it was for the previous 30 minutes or 45 minutes or so. So you're really looking at the candles, you're really looking to see what's going on in the markets previously, what happened in the previous sessions, what the market is doing now, why is it creating the wicks that it is it hitting my support and resistance lines that I've created on the 4-hour chart or the 1-hour chart. At the same time, do I have other real estate on my charts? Example, my EMAs, middle Bollinger Bands, that sort of stuff. These dynamic trend lines here, these channel lines. If price is going up there and hitting it, and they're all telling you the story of a beautiful trade, this is going to happen, then those are the trades that you want to be taking. So in order to make $1,000 gradually, or 250, or how much ever it is, you do need to put a little bit of time analyzing it. Okay, so I'm going to go and write this down in my trade book, and so that was the live trade. Okay, all the best.